Episode 77, Truth of Trading channel. Just some thoughts on the road today. 2 for 2 on the scalps for the week. We took a USD JPY long trade. I know Mr. Short finally went long on something. You got to play both directions. That's another reason that got me into trading. First, I'll talk about the trade, then we'll talk about that subject. I'll put in the description the short clip that I posted that's attached to the trade I'm talking about. And I just highlighted on there, market structure is important. And I did a video before on the laptop. It's an older video on the channel that I uploaded that talks about market structure more, and it'd be good if I did a newer one, a cleaner one. That was on the old laptop, but the trade on dollar yen this morning, we're looking at it. It's about 6 a.m. Eastern time, and I just noticed on the low time frames, on the 1 minute time frame, I was noticing that it had been dropping the past hour, and then I noticed that it had made on very small market structure, we're talking about, it had made a higher high. And I saw that and I said, hey, something just happened. It's kind of like a warning. It just made a higher high on this. It just broke that pivot point. And then price came down and it filled a gap and it made a higher low. Now at that time I was watching it and I said, if price was to reverse here in order to make a higher low, it would be at this point. It wouldn't be any lower, because then that would invalidate the structure. And sure enough, I entered there just above the higher low by the time my order got filled. And it took a few minutes and it had continued. And it had made another higher high in order to fill another gap, and it hit our take profit. But to sum the trade up real quick, it was simply a market structure play. Price made a higher high, it made a higher low. If that is a change, it was a change in market structure, because the previous structure was lower high, lower low, lower high, lower low, lower high, lower low. And then you get a higher high all of a sudden. Hey, that's the warning. And then you get the higher low, that's the confirmation. Now, how do you know that when you're trying to enter at that higher low, that's where that higher low is? You don't, because you don't know anything in trading. You have to tell yourself that. All you can go by is the probability. The higher high gave you the heads up. The higher low, that was your chance to enter. It very well could have made another lower low, and you would have lost the trade. No big deal. But you were simply playing on the fact that what the chart was not lying to you about at that time, this is kind of me talking to myself here, is what the chart was not lying to me at that time. It was not lying to me. It was telling me that the structure had changed. So all I can do is, if I'm making a play like that, is play the structure the way it's meant to be played. It gave this sign, hey, we're going to change for a second here. And I took it. And it was a winner. And it was nice to see that play out. And now I forget what else the other subject I was talking about. Maybe it'll come back to me. And as far as I was saying earlier, the subject I was also going to talk about today was, you know, another thing that got me into trading to begin with was you got to learn how to play both directions. You know, that is like a key factor that piqued my interest a few years ago on learning how to trade. Because prior to really caring at all about investing or trading or anything of the sort, all I had known about it was you buy something and it goes up and then it sells at a higher price. You know, I had not known anything about you can play things to the downside, or you can just sit on the sidelines with cash. And when I started learning about the fact that you have the ability in certain markets and certain assets that play inverse, that play to the downside, you know, it really piqued my interest, because I seen that a lot. You know, you don't always see things go up, you see things go down too. And it really was kind of something that, you know, interested me and got me into thinking, okay, you know, how can I play something to the downside? How can I make money on something dropping? You know, there shouldn't be a way to only just make money on something going up. You should be able to, if you're a trader and you are saying that, oh, this is probably going to go down, you should be able to capitalize on that fact if you can see something that somebody else can't. And that was it. That was just kind of the thought I had on that. You know, you should have the ability to long and short things. You know, they shouldn't restrict that ability from people. And as far as the markets go, you know, it's good to learn on lower time frames, but you always have to keep the bigger idea in your mind. And one thing that I did a few months ago that I'm realizing now is I was so focused on the smaller time frame on this one particular asset that I was trading, or pair that I was trading. And you know, I had gave the bigger time frames some thought on it, but I never really executed on them. I was just executing on the smaller time frames. And I haven't really looked at that pair in a while. And I was looking at it last night, and I realized during the Asian session, it had, in the past 3 months, it had made a beautiful move, you know. And it was like, that can kind of be disheartening to you as a trader. You cannot let that bother you. You cannot let stuff like that bother you. Because now, okay, we're like 3 years in. Think about the price action, and I'm nothing, you know. And think about the price action that I've seen, you know. And I've seen dozens of pairs and stocks and assets, you know, make huge moves, go here, go there on high time frames. I've seen these play out, and a lot of times in the past, especially at the beginning, you can be hard on yourself, like, why didn't I get that? I was looking at that. You know, you can't do that to yourself. You cannot punish yourself mentally like that. All you can do is learn from that and continue forward. And in my 3 years, I've had dozens of those high time frame opportunities just pass me by, you know, just leave me behind. And it used to bother me immensely, and now it doesn't even faze me, because all I do now is I just focus on the trade that I'm planning to trade. If I'm going to trade something, then I'll trade it. You know, I made the decision then and there to either get in or not. It's like one particular stock I'm holding right now. I bought it 3 months ago, maybe 2 months ago. And I have a high time frame, the daily, well, more like the weekly, really, play in mind. And I'm holding it. And it still hasn't made the move. But from past experience I've had, the probabilities tell me that it will make the move. Now, I don't know when it's going to make the move. It might make the move in the next month. It might be 5 months, 6 months from now when it makes the move. But the edge is in my favor that it will make that move. So I'm going to hold it. And I've been holding it for a couple months now. And that is crazy when you're playing those high time frames, because some people, they just don't understand. They understand it, but they lack the capital or the patience for plays like that. But those high time frame plays, that's where the more money you have, the more you're making money. I'm telling you. The majority of traders that have a little bit of money behind them, they're not focused in on the 1 minute and the 5 minute, my guy. They're looking at the daily and the weekly, the 4 hour at the least. You know, they're looking at these bigger plays, because those bigger plays is what's going to pay them what the capital they're putting behind. You know, if you're on a 1 minute time frame and you put down 50 grand on this small trade on this 1 minute time frame, the algorithm's set against you on that, because it will just easily put that in a drawdown immediately. But if it don't know that you're really playing a daily pattern or a daily trading plan, you're comfortable with being in drawdown for a while, because you have a longer term mindset, if any of that makes sense, you know. But this one pair I'm thinking of in particular, or the stock I'm thinking of in particular, you know, it's just been sitting low. It's sitting low. It's been enticing people to buy it, and every time it has a nice little consolidation area where it gets people to buy, it drops it down a little bit more, you know. And it's just making that behavior kind of like how that pound dollar trade made yesterday. It seems like it's just trying to get enough people to cry uncle before it finally moves up. And it'll be interesting to see play out. But that's all I got for today. You know, learn about market structure. Because market structure, doesn't matter the time frame, it will give you some key guidelines into how to base your trading. And I'll holler at y'all later. Peace.